Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're going to take a quick look at the recent performance of the British pound against the dollar and against the euro. So let's start here by taking a look at GBPUSD, often referred to as cable. I've got it here. These are one-day candlesticks, and you can see that, just to recap the last couple of months, since late April, we've sort of been trending to the downside. It's been quite choppy, but we've largely stuck within the confines of this descending trend channel that I've marked up. You can see it kind of begins, the bottom side of this trend channel begins back in April. Then you have another test in July, you don't break through it. Then we have another test at the end of September, didn't break through it. Similarly, to the upside of this trend channel, price action capped, starting to be capped at the start of June, then again in July, and then again in September. So it's like, it's not all the time, but there's been this quite consistent pattern of lower highs, lower lows. But obviously, right here, you can see it looks as though we've broken out of this bearish trend channel in recent days. Looking likely that we're going to test this 200 DMA here, which is marked up in blue. That's at about 138.50. And then you got this key area resistance back from September, just below 139.00. Then this key area of resistance, which was resistance in April, end of June, and end of July. That's just shy of the 140 level. So those are the upside levels to keep an eye on. And technically speaking, things are looking quite bullish. Just quickly, we've seen sterling strengthening against the US dollar. Well, likewise here, you can see in the last couple of days, just as we've seen that reversal higher in GBPUSD, we've seen this reversal lower in euro sterling to reflect sterling strength. And euro sterling now at fresh annual lows, fresh multi-year lows actually. You need to go all the way back to February 2020. Last time we were, where are we right now? Yeah, in the mid 0.8400s, okay? We have pulled back a little bit from those lows that were set last Thursday, but yeah, we're still below that that previous annual low set back in August, and well below that annual low set back in April. So yeah, technically speaking, looks as though euro sterling could be moving towards the 183 level or below, because when you look at it, just look back here. There's no significant resistance really, is there? I mean, arguably there's this low here. What day was that? 25th of February 2020, 83.30 whatever. Okay, maybe that will be some support, sorry, but yeah, there's no support. So technically speaking, things looking quite bearish. But let's get into the fundamentals. Why has GBP been pressing higher in recent days? Well, I mean, it's helped the fact that the dollar has pulled back a little bit from recent highs. That's been helping this currency pair, GBPUSD. Euro's doing a little bit better this week, but hasn't been doing as well out of the dollar weakness as other currencies. More risk-sensitive currencies have been performing well in the last couple of weeks. Because risk appetite's been recovering. Obviously, we've been talking about how stock market's been pressing higher. Looking at these other currencies like NZD's pressing higher, AUD's been doing well, CAD's been doing well, commodity currencies have all been doing well. Obviously, there's been a lot of focus on the energy crisis. But there's also been a lot of focus on central banks and how amid all these inflationary pressures from supply chain disruptions and rising energy costs, which central banks are going to respond and how aggressively are they going to respond. And basically, the Bank of England in the last couple of weeks has positioned itself as one of the more hawkish of the developed market central banks. No, they're not quite as hawkish as the RBNZ or the Norges Bank, but they're more hawkish than the Fed, than the ECB, than the BOJ, than the Bank of Canada. They're the next most hawkish now, and money markets in the UK anyway are now pricing in 2 rate hikes in the UK by the end of the year. I think money markets now seeing a 15 or maybe even a 25 basis point rate hike next month. and then another one potentially at the end of the year. And this has been massively boosting UK short-end yields. So 2-year yields have just rocketed higher in the last couple of weeks. 5-year yields up as well. And this appears to be lending some support to sterling. Hawkish central bank, higher yields, that makes sense, right? Although some analysts are pointing out that given the historical relationship that you observe between GBP and bond yields, the recent move higher being seen in specifically the short end segment of the UK bond yield market, the move higher in sterling that we've seen isn't actually enough yet. So basically sterling could be undervalued given the move higher in UK yields to reflect the hawkish central bank situation. But that could be because we've actually seen longer term UK yields not moving up as much, perhaps amid fears that the Bank of England's new hawkish stance is actually going to be a mistake, and that in the end that could result in the Bank of England, you know, hiking aggressively this year and next year, but then having to cut rates again to, like, you know, stave off a recession, because there are a lot of risks to the UK economy right now. Obviously, we've been talking about energy prices, but there's also monetary tightening will slow the economy, but there's also a lot of fiscal tightening going on, like there's tax hikes next year, there's universal credits already being cut this year. So yeah, some concerns that about a policy mistake for now holding back GBP. But yeah, in terms of the technicals, things are looking quite bullish. So guys, yeah, hope you enjoyed the video, and I'll see you all in the next one.